Ladies and gentlemen, welcome back to the channel Apes and Apeettes. This is a price prediction video for AMC stock by the end of this week. And I think there is a lot of potential bullish factors and bearish factors for this week that you could really make an argument for both sides. So that's kind of what I'm going to do in this video and let you guys know where I think AMC will end the week. This is not to be seen as a recommendation to buy or sell AMC. This is not financial advice. If I have to say it at this point, I'm like beating a dead horse. This is not financial advice. Do not base your trades off of what I say in this video because this is purely my opinion. Nobody knows where the stock is going to go. I don't. But what are the indicators that tell me at least we could go up or down? That's literally what I'm doing in this video, guys. So if you appreciate that, hit that like button and subscribe to the channel if this is your first time here. So with AMC is going to be highly correlated with what the markets do. And you have economic data for this week that really starts to come out on Wednesday, Thursday, and Friday. But more so Thursday and Friday. So you have a lot of economic data at the end of this week, as you typically do. And you also have a lot of earnings this week. But your big dogs like Apple, Google, Amazon, they report earnings on Wednesday. It's been very rare in history that we have actually seen, or recent history, I should say, that you have seen all three of these companies report earnings on the same exact day. So Thursday and after hours is going to be a massive move for the stock market. You're probably going to see the after hours move at least 1% up or down based off of these earnings. But that really begs the question of what could happen with AMC in the beginning of the week. And I think earnings will still be a major driving factor of this market because you don't really have anything else. We already kind of know what to expect from the Fed. It's not like we're expecting to get a huge new announcement or something drastically different from our expectations. If that happens, that's going to be its own shit show. But all we have is earnings for Monday, Tuesday, and Wednesday. Monday in pre-market, you have SoFi. Tuesday in pre-market, you have ExxonMobil and UPS, GM, Pfizer. I always want to say Pfizer, Caterpillar, McDonald's, Spotify, Phillips 66, Marathon, and Corning, whatever that one is. The big one here is going to be UPS because that is correlated to Amazon. Their business models are almost intertwined in a way. So if UPS has good earnings or at least decent earnings, that could set Amazon up for a decent pre-earnings run up. Now, I will tell you guys, with all of these earnings, expectations have been lowered quite a bit since the beginning of 2022 and the middle of 2022. You've seen a reduction in earnings expectations. But really what you've seen over the past couple of months is a lot of fear of these upcoming earnings. So as long as earnings don't come in as a total failure, then you're probably going to react pretty positively, or at least neutral, right? You might go down a little bit, but you're not talking about Facebook dropping 30% off of really not bad numbers, not terrible numbers. You're not in that same camp right now, unless we got something really bad. And I don't think you're going to get anything really bad from UPS or from any of these companies until potentially on Thursday. That full year guidance for Apple, Amazon, and Google is going to be important, but this really sets us up for the first half of the week at the very least to potentially be bullish. And I do think it will be. And a big reason why I do think it will be is because there's not a lot of bullish positioning. So as far as positioning in the markets goes, this is some of the lowest net long exposure that hedge funds have to this market in over 20 years. Meaning that if earnings are better than expectations on Thursday, then hedge funds, they're not in a position to benefit from it. So you might see people wanting to get more exposure heading into Thursday earnings. And that could give you a pre-earnings run-up. And that could bode well for AMC stock at the same time. Now, something that makes me very bullish about this upcoming week is actually what happened last week. And you can see on Thursday and Friday, the low ends of these candles, the wicks is what they're called, is the lows of the trading day. And on Thursday and Friday, it basically was the same at about $5.10 per share, roughly, right? We bounced at the same levels, and we went above this key squeeze line. And this line is the blue line. This is the line that you were at and found support before the June rally of 2021. You were at the same exact level again. And from my overall investment experience over 5 years now, actively trading the markets and keeping up to date with technicals, with news, with data, how hedge funds operate, how the markets operate as a whole, I think on Thursday and Friday you would not have bounced back above this line if we were destined to have a bad week in the following week, right? Thursday and Friday tend to be weak if the next week is going to be weak as well, right? That's where you can get the down Friday, down Monday phenomenon, where if you go down on Friday, you're more likely to go down on Monday as well. It's because hedge funds, market makers, these money managers, they talk to each other. They know roughly what's going to happen in the next week. With AMC, it held up very well and even got stronger on Friday than it did on Thursday. So that does lead me to believe you're in for a pretty positive reaction, at least for the first half of next week. Now, let's take a look at the option activity and the open interest for this next week as well. So for the $6 call, you have 10,000 for open interest. That would be about 1 million shares that would have to be hedged out by the market makers if AMC gets to or above $6 per share. At the $6 put, you have 2,300 for open interest. That's 230,000 shares that would have to be hedged out by the market makers. This could be significant and could help push you above $6 if you get to that $6 level. And we're going to talk about, where I obviously expect AMC to go in just a minute. But that $6 strike is the strike with the most amount of open interest. And I think that's very interesting because you're at roughly $5.30 per share. It wouldn't take a huge move to get to those levels. It would take about an 18% move, give or take, to get to $6 per share. I think it could get a little bit explosive after that. But again, you're going to have some cap on this next week in the broad markets to how high you could go because we have a lot of big earnings, right? The markets aren't going to just rip in the beginning of the week because we know there's potentially a lot of pain after earnings to come, or maybe there's a lot of good things to come after earnings. But just the overall fear of what if earnings are bad will keep a kind of lid on this market, for lack of a better word. But until we get to Thursday and you see Apple, Amazon, and Google report earnings. Now, let's run through AMC's Ortex data, then we'll go back to the charts and actually give you guys the price prediction. So for AMC's live short interest of free float, if you did not see the last video, that is sitting at 22.9%, 118 million shares sold short. Record levels for all of 2022. You have to go back to June of 2021 to get to these levels again. The cost to borrow average of 160%, cost to borrow max of 351%, and cost to borrow minimum of 1%. Cost to borrow average from interactive brokers of 103% as well. So the data here is looking very much primed for a short squeeze, number one, but at least for a next a bullish next week. So I think that is also important to point out. Now, Stocko tracker data as well. If you did not see the last video, for this Friday, you have about 11,000 calls in the money currently and about 38,000 calls that are out of the money. Puts are in money of 5,000 and puts that are out of the money at about 45,000. Now, I will say, on weeks we have very large option expirations, we have tended to be bearish in the past. And weeks with not a lot of open interest, you can actually see bigger rallies. I think it frees up capital a little bit more and has a little bit less of that downside hedge from the market makers. So I think overall it lets you move around a little bit more, and that can give you a little bit bigger of a bullish reaction. So I think that might actually be a positive thing for this week. We'll obviously have to wait and see, but the last couple of weeks, last couple of months has showed us large option expirations usually lead to a downtrend in AMC, or at least not a very positive following week. So let's go back to the charts. Now, I think on a good note, you're probably going to get to the same level that you were at on January 18th. I think it's very possible you hit about $6.50 per share. And why I say that is because this is the downtrending line of resistance. This is going to be the resistance level, this line right here. And this is going to be a key technical level, because if you break above this, then you would technically be in an uptrend that you have not been at since at least August of 2022. But even going back, I mean, to September of 2021, after the June rally, you have not been above this descending level of resistance, just showing you're in a downtrend. If you can break above that, you're going to be in a pretty solid uptrend. I don't necessarily think we will break that and hold that by the end of the week, unless Apple, Amazon, Google earnings come out good. In the case that does happen, you could see an even larger rally from that point. So kind of my base case scenario here is for roughly $6.30 per share to $6.50 by the end of this week. And this is going off of the strong support, strong momentum we've seen on Thursday and Friday, and this level that is very close right here, and also the other reasons that we've talked about. But really, if I were to boil it down, it's the strong momentum we've seen on Thursday and Friday, and just the need for hedge funds to get some degree of exposure here, right? Because they're not long in the markets. They're very short in the markets, even still after you have seen this rally in 2023 so far. Now, I think on a worst case kind of basis, $5 per share is going to hold us a lot of support, and I think that's really your worst case scenario for this week, even though I don't think it would come until the end of the week, until after you get earnings from said companies, Apple, Google, Amazon. I feel like I'm repeating myself over and over again. I literally am. That's where you could get more downside in the market, at least in my personal opinion. Now, let me know what you guys think. What is your price prediction for this week for AMC stock as well? How are you trading this? Are you not trading this? Let me know what you guys are doing with your positions. That is it. Khaleesi, say bye, guys.
Bye, guys.
Say AMC stock to the moon.
To the moon.
AMC to the moon. Say hit the like button.
Eat your Wi-Fi.
Okay.